All right, all right, all right. I think we are live. We are indeed. Okay, fantastic, guys. Fantastic. Welcome to today's live stream. Let me just make sure that everything is working here fine for you guys. Welcome back to another live stream. I'm enjoying doing these live streams. And Hey, real. I've been really enjoying doing these live streams pretty much every day instead of just doing the day by day videos. So anyway, so if you guys are watching this whether live, or whether if you're watching it live right now, let me know in the chat box below whether you prefer me to do these live streams, or whether you actually prefer to do whether you prefer me to do like the videos like I've done in the past, pre-recorded videos and upload them, or whether you like me to do these live streams that I've been doing lately instead of the pre-recorded ones. Everything's pretty much live. So let me know what you like. Do you like the live streams or do you like the pre-recorded stuff? If you're watching the replay, then just let me know in the chat box below what you like. Alrighty, guys. So fantastic. Let's get straight into today's. Either way is good. Fantastic. Alrighty, guys. So I guess the benefit of doing the live ones, right, is that I can interact with you guys. You know what I mean? So James, you know what I mean, right? Like, I guess that's the good thing about this, right? If you like my work and you want to be able to interact with me, ask me questions, it's a really, really good way to do that. And to see things like as I'm doing it live on the spot. So there's no editing or anything like that. I don't really need editing because I know I've been around these markets. Pre-recorded is more flexible schedule, I guess. Yeah, but I guess also Nicholas as well too. If you missed the live, you can always watch the live session later on, right? Like it was pre-recorded, so you get best of both worlds. I guess that's the thing I love about doing the live sessions is you get the best of both worlds with that. So anyway, guys, so in this session today, obviously, the markets are up today, and silver and gold have been a bit of way down through there, and I want to share with you what's still going on with that big picture. What's going on with the stock market? Oh, geez. What's going on with the stock market, and what's going on with that big picture, and what's it saying, and so on and so forth. And so that's what I want to focus on today, guys, is that big picture. Okay. Now the small picture is the daily chart, the big picture there. So anyway, let me get straight into this right now, and we are going to get started. Now, for you guys that are watching the pre-record of this, guys, this is a live stream. So this is me just getting warmed up with the audience, and then I'm going to go straight into the content, right? So don't have your knickers in a bunch, because I don't start the education straight away. This is live, and that's what's supposed to be interactive. Anywho, let's go and have a let's actually bring this up here. All right, guys, do not place a trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the markets, and trading is risky, and it does take you a long time to become a really good trader. And I really do mean that, guys. Okay, like, be smart about the way you're trading. Don't be throwing all your money at one trade hoping that that's going to be the next big move, because that never, ever, ever works. And based on that disclaimer, I really do mean this. Every time that I've gone backwards, I've put too much money onto something and I've tried to make too much money too quickly. And 6 months later, I'm like, man, I just wish I was back at break even. And I was like, oh man, I'm such an idiot. So anyway, guys, if you haven't done so yet, then make sure you go to mastertraderlab.com. If you haven't done so yet, to get your free trial to the Master Trader Lab. And essentially what the Master Trader Lab is that I'm giving you brand new monthly trainings. And these monthly trainings around all the areas that helps you become a good trader. The framework to a successful trader, chart reading mastery, the mindset, understanding the cycles, and so much more that helps you with all the areas with trading, not just the trading system, but all the areas with the trading system. But I'm also giving away 6 awesome bonuses as well too, if you haven't done so yet. So to get all that, guys, go to mastertraderlab.com. You can get a 3-day free trial. If you like it, stay a member, and it's like $6 a month or something. And if you don't like it, then let me know. You never be billed. So there we go. There's my little pitch, guys. Let's get straight into the markets now, okay? Now, let me see if I can do this. I'm just going to bring this up through here. I'm going to bring this up through here. And I'm going to do that through there. All right, fantastic. Let's do that through there. All right, let me do something here. Oh, there we go. Like my screensaver, guys? That's my screensaver, basically. All right, let me bring up this one here again. All right, beautiful. We're back again. All right, so one thing I want to share with you guys is what's happening with the big picture. Okay, so let's start with the Dow Jones first. All right, and one thing I'm seeing with the Dow Jones, if you look at what's happened to the Dow Jones, we're getting a nice rise, getting a nice slow rise out of this here, and we're breaking above the 50, just above the 50 right now, and this has been a very, very nice slowly rise on the upside. Now, again, guys, when we're trading, we want to be able to trade what we see, not what we think or fear. And this is one of the hardest things for most traders to comprehend, is the fact that just because we're in a downward trend doesn't mean we won't be going into an upward trend. And because we're in an upward trend doesn't mean we're going a downward trend, and so on and so forth. We need to be flexible with the markets. So with that being said, when we're looking at the markets, okay, when we're looking at the market and when we're trading the markets, one of the most important things to do is to be able to view what's going on right now in the market. So what I'm going to do right now is I'm going to go over to this this template that I've got through here. All right, and I'm going to share with you what I see on this template here. Now, what I've got on this template, it just gives me a much broader view on what's going on the larger picture. Okay, on the larger picture on these markets, and I go from a weekly chart to the daily charts, and then even to the line charts of both those. And it gives me a much clearer picture on what's really going on with these markets chart-wise, okay? Are we still in a downward trend, or have we changed, and all that sort of stuff? Because that's the most important thing, right? Because we never know what's going to happen, and all we can do is, okay, what's the market telling us right now? Have we changed trend? And so on and so forth. And if we have, then we need to change with it, and so on and so forth. So if I bring up the one thing that I see on the Dow Jones, if I bring up, say, I'll bring up this one right here. Okay, this is the candlestick chart through here. And if you notice what's happening right now on this long-term chart here, okay, look what's happening right now. We're getting very close to what we call X marks the spot. Now, will it break through? I don't know. But what I'm saying right now is that we've just had a nice rally, roughly a 50 to 60% rally out of this thing here. But as you can see, right, and the markets do respect these long-term trend lines, and I'll show you what I mean in just a minute. And as you can see, right, we had a support down here. We had a support down here, support. And look where the market's rallying back up to right now. It's almost to the top end of this support line through here. So the market will respect that. Not only that, but I have this other trend line coming down through here, which is, remember, this is a weekly chart, guys, okay? This is a much bigger picture here on the weekly chart. So now we have this market coming down through here. So we're getting towards where we call X marks the spot. It's really interesting that this weekly chart is now getting into that area where the market's holding here. Now, not only that, but my green line here, this green line, if I bring up my yearly chart, guys, if I bring up my yearly chart and I open this up a lot more, this is my yearly chart. This is the green line here that this green line here that you see. This green line represents a significant area, not a level, but an area. Because it's a yearly chart, this represents a significant area where the market is likely to find significant resistance in the markets based on that chart there, based on this here. Okay. So you can see this is the yearly chart here. This is going back there. So if the market does rally, which is getting towards right there right now, I would expect to see a bit of resistance. So we're getting right into this X marks the spot level through here. Really interesting. And if you look at this market, once again, guys, if you look at what this market's doing, okay, you can see, and if I bring up my good old Snagit tool here, my good old Snagit tool. I love using Snagit. Snagit's awesome. Bam. All right, cool. If you bring up the Snagit tool, you'll be able to see, actually, you know what? Let me see if I can squeeze this chart up a bit more so I can get a much clearer picture here. All right, there we go. If you bring up this one here, remember guys, this is the last significant low. Or let me do this thing here. Circle. And this is the last significant lower low. So the market, and we had this high point up through here, and now we had a slight higher high, and now we rally down to make a lower low. A lower low now, this lower low here, is now indicating a possible long-term change in trend. Now we're rallying back up to this X marks the spot level on that weekly chart. Now, again, it's a weekly chart. It may hover around here for another week or two before it starts to drop, if it's going to drop. Now, if we start to break above all these levels once again, then the downward trend is pretty much all over Red Rover, and we're probably likely to make new highs again. But here is the thing, guys. These weekly lines are likely to be respected big time, and they do get respected big time. Let me show you what I mean here. So this is the Dow Jones here, okay? We're getting into that X marks the spot there. Now, if you have a look at, so I'm going to go down to, now I'm going to go over to this chart here once again. I'm going to bring up now the S&P 500, and I want to share with you what I see on the S&P 500 here. So this is the S&P 500. Okay, now remember, guys, this is the much larger picture here. This is looking at the big picture. So what's really going on? Because the day-by-day chart, we can get a lot of noise. We get up bars, down bars, inside bars, outside bars, up, down, so on and so forth, right? We get a lot of noise. So if I go to my daily chart now, look what happened with the S&P 500. Again, looking at the longer-term picture, we had what? We had support down here. And you know what? Let me bring up my good old snagger tool again, because I like a snagger. I love what I do, guys. Trading is awesome. So we have low point, support through here, almost a support through there. Support, support, support. And look what happened. As soon as we broke down, look at it. A test resistance and a test resistance, and now we broke down. We broke down, didn't we? We broke down to what? To create a significant lower low. Now, but some people say, John, well, that doesn't mean anything. It does. The market's telling us something. The market is telling us we have created a significant lower low. So this actually has a high probability of being a significant lower high and rolling over. Oh, John, that's just a lot of BS. You just made that up. That's how the markets work. All right. Let me show you what I mean here. Now, what I'm sharing with you now on the S&P, before I get into that, as you can see, right, support, support, support. And the markets broke down, and now we're testing a lot of resistance through here. And as you can see, once again, is that I have 3 levels here. Now, the S&P is a bit further away from this upward trend line, where the Dow Jones are getting very, very close to that level. We're getting very close to this downward trend line where the market is likely respecting. And this green line here, once again, is if I go to my yearly chart, this green line, as you can see, this green line here is an area of significant area of resistance of where the market is likely to find. And once again, it's an area where the market is likely to find resistance here. Okay, I'm not going to talk about how I got that level there, but because it'll take me a bit of time for me to understand that. I don't want this broadcast to be too long. But let me go back to the daily or the weekly chart here for a minute. And let me share with this here. So as we're getting a rally back up here, and now we're getting very, very close to those areas of resistance here. And once again, that green line represents that. Now, let me bring you back to once again how the markets work, because this is so critical of flowing with these significant levels. And I talk about these significant levels on the weekly chart because that's absolutely key. That's absolutely key. Yes, we could have something going on with Trump and the election and this and that and China and all this sort of stuff. Yes, that may be happening on a day-by-day basis. But guess what, guys? The news is paid. The news are paid to report something to the reason why the market moved today. Why can't the market just move because the market just moved? But remember, the market is always creating some picture for us. Just because we get a strong rally like we're getting right now doesn't mean we're not in a significant downward trend, because it's called a pullback. So let me share what I mean here by looking at the highs and lows on how they really tell a picture here. Let me go back to the transportation average, because this is a very, very telling story here. All right. And you'll be able to see what I'm looking at here for a minute. This was a very, and I was telling my private clients about this when this actually happened. I'm like, this actually could be a significant change in trend right now in the markets here. So what is that? Let me bring up, I'm going to go snag it. Let's go snag it on you guys. This is the transportation average, okay? And look at this is just the facts, guys. This is the facts of how the markets work. And once you understand how the markets work, they start to tell you a story so you can remove a lot of the confusion. So, okay, this is what's going on right now. And okay, even though we're getting a rally or even though we're getting a drop and so on and so forth, what's going on? So we have a low point down here, okay? So we have a low point down here and we have a higher low, higher low, higher low, higher low, higher low, higher low. Okay, so what do we have through there? The buyers are clearly rising their price. Remember, this is a weekly chart. The daily chart, as you can imagine, right, it'd be up, down, up, down, up, down, up, down, up, down, up, down. That's why it's so important that when you're trading, you keep an eye on that larger picture, which for me is that weekly chart. And then every now and then, because the year has closed, I went to the yearly chart to see if the market's telling me anything based on that yearly chart, and it did, and it has. I'll get back to it in a minute. But look what happened here. The market created a lower low. That tells us that the buyers are no longer raising their prices. And as you can see, right, we made a classic sort of I'll call it like a stop and reverse pattern. It's sort of like an end of move or end of trend type of indicator where the market has a resistance point back here. It breaks just above it to get people long, and then they slam it down. As you can see, right? Now, if I zoom this in a lot more closer, you'll be able to see what I'm looking at here, right? So it broke above it. This is like an end of trend indicator, or an end of move indicator. And then the market ran down and created a significant lower low. Now, all we needed for this market to completely change trend is what? A significant lower high. So as this market was rolling back up through here on the daily chart, I was telling my private clients, listen, do not be fooled by this, because we could be getting another lower high here soon, and we could be getting a rollover. And that's exactly what happened. And then we got a nice sharp drop back down to my longer term trend line down here, almost to that level, and then it bounced. And if you look at that, that's exactly the way the markets work. Now, the market can change trend. You know, we can go lower low, lower high, and then suddenly we start an uptrend and so on and so forth, right? That's the whole point of the game and of trading, is that the market can change from uptrend to downtrend, you know, in a matter of a few weeks. So as you can see there, right? And if I go back to now, as you can see, what I've explained there is that that's how the markets work. And it does give you, the market does give you some indication of, are we starting to change trend right now? Is there a warning sign that the larger picture has been changed? And once again, if you look at that daily chart, right? And if I squeeze my daily chart up, if I squeeze my weekly chart up, look what's pretty much happening all through this level through here, all this weekly chart. This Dow Jones was pretty much significantly creating higher lows all the way up, higher lows all the way up, and now we created a lower low through here. That's a warning sign that things are not. And now, once again, on top of that, we now have the exact same thing as we saw on the transports, which was basically that stop and reverse type of a pattern. And what I mean by that, once again, if I just bring up my Snagit tool here, you can see how the Dow Jones and even the S&P, right? What actually happened is that we got a slight rise above this here through here, and then we started getting some sharp drop off through here. So markets dropped down, the markets dropped up. So guys, for me personally, I'm not bullish or bearish on the markets. I'm just, okay, what's the market telling me right now? And I don't ever want to go based on my opinion or what I think, hope, or fear, because that is always wrong. Okay, what's the market telling me right now, and how can I, and that's basically all I have to go off. And if the market changes from a downtrend now to an uptrend, I have to change with it. That's just it. So, yes, we're getting a nice strong rally out of this. So it'd be really interesting to see what actually happens, you know, with this here. Now, the interesting thing is that if you look at both these legs through here, guys, and this actually happened with the, what's the, I've got my Forex and futures platform closed right now. Because I do a lot of trading on the Hong Kong. Sunday morning here. God love it. The Chinese market there, and I'll see if I can actually bring that code up. Guys, can you put in the chat box what is the code for the Chinese market or the Shanghai index? I'll have a look at that in a minute. I'm going to share something with you for a minute, okay? Now, what's actually happened through here, right? Look at this here. Look how that this market had a sharp drop from here, from there to there, right? We had a sharp drop. And now we're getting, look at this weaker rally, right? We're getting, if you look at the angle of both these moves, now I'm not saying this means anything, but I'm just saying, if we're looking at the psychology, look how sharp this move down was. And then look how weak this rally's been. Like, look at all these small little candles. They're just slowly going up. There's not a lot of strength behind this move here. So I'm not saying this is bullish or bearish, guys. I'm just saying that if you're looking at this picture here, there's a lot more strength on the bearish side. And that could be telling story there. Shanghai code. What is that? What is it? X Y X L Y O. Is it? Oh. You know what? China ETF. Pro short. What is that code? What is that code? Because I want to share something with you that happened with the Chinese market recently. I think this is it here, the FXI. No, that wasn't it. That wasn't it. Let me see if I can go to. All right, just give me a minute, guys. I'm doing this live on the spot right now. So let me go to watch list. I want to go to main. Oh, I deleted it. Shanghai, what is that? MTI, was it? All right. So I forget it. Anyway, there was. China index, was that it? No. Anyway, there was an awesome pattern there, and I think I'll look at that later on. So, any event, that's basically what guys. That's basically what I see happening. That's basically what I see happening right now on the bigger picture, there, guys. If I have a quick look at, say, silver and gold here as well. Once again, and that's why we're getting a warning sign that this move here on gold, we could potentially be getting a nice move down, because as you can see, right, we're getting this on the gold chart. We already had this low, and now the market created this significant lower low. So we could be getting some sort of significant lower high here, and we could be getting ready for another drop here. That's a possibility. That's a possibility of that happening, and the same with silver as well too. We're still in this big downward trend, and as you can see, right, silver and gold are starting to sell off from this resistance level through here. So there's still a really big possibility of silver and gold continuing to sell off, in the mix of these things here. So that's basically what I wanted to share with you guys. Again, it's about the bigger picture, and once again, this Dow Jones is definitely a key that we're getting very close to this X marks the spot level. So I wouldn't be too surprised if we did start to see some sellers come into the markets there. Alrighty, guys. So let me answer some questions. If you guys have any questions, then I'll be happy to answer those. And while I do that, I'm going to give my membership a plug. Guys, if you haven't done so yet, there we go. Cool. If you haven't done so yet, make sure you head on down to mastertraderlab.com to get your free trial and also the bonuses, where you're going to get monthly trainings just like this one, to help you guys out on all areas of becoming a really good trader. Because it's not just the trading systems, right? You got the framework, you got the mindset, and you got chart reading, and there's other finer details here that makes you a well-rounded good trader. So go check it out, guys. Get a free trial. If you don't like it, let me know. You'll never be billed. Let's actually let me see if I can got any questions here. Live is cool, fantastic. One sentence sparks by spree. Should have listened to Trump and bought the dip. I wouldn't say that. You know, and we'll just see, right? We'll see where we are at the end of this year. And if I was a betting man, I would say that we're probably going to be ending. We're probably that this market's probably going to be down towards the $18,000 level by the end of this year. So even though we're getting a rally here, guys, remember the market. The market, guys, and this is something that's really interesting. The market is much bigger than Trump, much bigger than the Fed. You must understand this, okay? Just because they have their arsenal of what's going on. And let me explain what I mean here. As I've been reading Ray Dalio's Big Debt Crisis book, something that came to, I think something that I really noticed about the Fed and about the the government and all that sort of stuff, of how they have the plunge protection team and all this sort of stuff. While people think, oh, well, the market's never going to go down because there's a plunge protection team. That's just total crap. Look what happened in the last 4 months. Or where was the plunge protection team then? Well, they did come in, John. Yeah, but you never know. You never know this. So anyway, what I'm talking about here is this, okay? Listen to me here. If you think that the government has a really big level there where they can support it, support the markets without the markets really, like, remember, the market is bigger. The market is bigger than the stock market itself is so much bigger than the Fed and the government that whatever can do. Now, I think it was 1929, guys. I'm going to give you guys a bit of a story here, okay? I think it was 1929, and in 1929, when the stock market started to crash, maybe it was 1929, or maybe potentially 1937. This happened, okay? So when the market started to really pull back in 1937, and I mean one of those 1929, 1937, when the market started to pull back, the market started to sell off really, really hard. So the government, what they did is they actually stepped in, and they actually started to flush a lot of money into the markets to find a bit of floor in the markets. So again, I think this was 1937. Now let me explain what I mean here by this. Let me bring up, just so I'm going to bring up the Snagit tool once again, and I'm going to bring this over here. And I'm going to share with you what actually happened here. Now, if you guys have read Ray Dalio's Big Debt Crisis, it's a must read if you want to understand what's going on right now. Now, let me see if I can. I'm going to delete everything off the screen here. Okay. Now, I'm pretty sure it was 1937, 1929. I know I've said that a few times, guys, but I'm trying to make sure that I'm not being, just give me a bit of leeway. But it was one of these markets. So it's one of these times. So what ended up happening was this. Okay, the market started to sell off. Okay, I think it was 1937. The market started to sell off big time through here. So then guess what happened? The Fed did come in. The Fed and the government did come into the markets, and they found a bit of floor in the markets. And guess what that did? That sparked a rally in the markets. So maybe, just maybe right now as we speak, that's what's happening behind the scenes. The Fed and the government are coming in right now, plunge protection team, and trying to buy it up. Now, then guess what happened? It wasn't too long afterwards that something happened, and then the market sold off again and created a lower low. Then the Fed and the government and the banks now started to come back in to try to put more liquidity into the markets to find a bit of floor. And then guess what happened? Then it started to have a rally through here. Now, without you even realizing this, what's actually going on, the market's showing you the market's falling down. So the government stepped in. So these green pullbacks, which is it's a pullback against the downward trend, that's where the government did step in. I'm not saying that the government doesn't never step in. I'm not saying that the plunge protection team is not real. They are. That's called the government and the banks, by the way, when things get really, really, really tricky. But then guess what ended up happening? Is that something happened in the markets, something spooked the markets, and even though the government was actually coming in and pouring money into the markets, it sold off again. So I hope you can see, if this was a very, 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 very big eye opener for me when I read this in one of the crashes in the last sort of century, and I read this, I'm like, oh, that really makes sense now. Because yes, the market does crash. The market does go down a lot, and then it retraces. But as you can see, right, if you keep it really simple, what was the market doing? Lower high, lower high, low, lower low. Without you even realizing all that sort of stuff. So if you think the government's going to step in, now, by the way, guys, let me say something here. If they do another quantitative easing, yes, that's a game changer, because now they're probably going to print $10 trillion and pump that into the stock market. If they announce that, I'm buying call options. So I hope you can, I hope you can see, guys, that yes, the plunge protection team and the government is real, and they do come in and they do try to support the markets, but the market is much bigger than them. And unless they start to unless they start to drop interest rates, pause on unwising of the balance sheet, and then do another quantitative easing all in one go, the market is likely to continue to sell off because interest rates are rising. Let's do this thing through here, okay? So interest rates are rising, which is putting pressure on the markets. They're selling off assets right now, which is putting pressure on the markets, okay? And there hasn't been any quantitative easing done. Yes, they've been putting a lot of money into the markets. They've been pumping money into the markets. But guess what? It could be just another one of the rallies. Please, guys, if you haven't done so yet, go read Ray Dalio's Big Debt Crisis. And if you want to read the one that you want to read the first section there, which is like 60 pages long, which is the architect. But the one that I really learned a lot about this was there was another page there. Basically, what actually ended up happening from it was the 1918 in Germany, I think it was 1929 and 1937. What actually happened? It was like a play-by-play book in 1929, 1937, and then obviously 2008. So and that's when I started to realize what was actually happening behind the scenes, what was actually going on behind the scenes of these markets. But as you can see, even though the government does step in sometimes, the market is much bigger than the government. Now, as I said before, the government has to do some drastic things for them to start to really shift around again. And that's it. What is that? Dropping interest rates again, pausing the unwising of the balance sheet, and doing another quantitative easing. That's what's really going to move the markets. But unless the markets keep making lower highs and lower highs, like we could still be doing right now, we're likely to still continue to step down. If the market doesn't keep doing that on that weekly chart, and we do start to rally, like we're getting a rally, just call this the rally we're getting right now. Right, we're getting a rally through here. If this rally backs up through here, then yeah, that could be a complete game changer. Then we now need a higher low, and we could be rallying back up. I don't think we're going to be doing that, guys, because where we are right now in the cycle of things and so on and so forth. But anything is possible. I'm not about being right with the market. I'm just like, okay, market, you tell me what's going on right now, and then I'll form my opinion from that. Okay. So that was a really big thing for me, guys, when I was reading this, because I never understood the makings of, is the plunge protection real? What does the government really do when the market's selling off and so on and so forth? By reading the play-by-play book in one of those crashes, 1929 or other 1937, one of those, I really saw. I really saw the makings of what the government does. But guess what? The market kept selling off anyway, even though the government kept stepping in to try to find a bit of floor in the markets. Now, guys, give me a yes in the chat box if you found that story really interesting and a bit more of an eye-opening of the markets and when we do go through a downward trend and so on and so forth, right? Because we saw that in 2008, right? The market sold off strongly, and then we went through a bit of a probably 2 or 3 month pullback, and then the market sold off again in 2008, right? This was a very big eye-opener for me, guys. When I started to understand this sort of stuff, it was just so eye-opening to see what was going on through there and what was actually happening. So, and that's why, guys, without even knowing what was going on there, the market was continuing to make those lower highs, and that means something there. Okay. So guys, if you have any more questions, just let me know. And once again, guys, if you like this sort of stuff, then that's basically what the Master Trader Lab is all about, guys, where every single month I will be releasing brand new trainings to help you on all the areas, like things like the stories like that there, you know, and understanding how the markets work and so on and so forth. That's what I'm doing every single month. Plus you get all those courses to, you know, with the chart reading, so on and so forth, to help you give you a bit of a boost as well too. So, you know, if you like this sort of trainings, then head on down to mastertraderlab.com, grab your free trial. And that way, every single month, I'll be releasing brand new trainings just like this one to really help you guys out. Because a well-rounded trader understands not just the trading system side, but the framework to a successful trader. There's a mindset to a successful trader, and also understanding how to really read the charts, what's happening right now. So if you guys have any more questions, just let me know, and then I'll finish off. Great Depression Story is good study videos on YouTube. Oh, so Marshmallow. Marshmallow, are you there, man? Yes, so it actually may have been Marshmallow. That actually may have been the 1929 case study, as you were saying before. I just read that in that comments there. So that was actually pretty. You said in 1929 injected didn't work first time. Great Depression Story. Yeah, well, there you go. Fantastic. So it was 1929. All right, fantastic. So Neil said the people in the government are heavily invested in the stock market. They are making a killing off this bounce up and down guaranteed. Well, I wouldn't say that. Now, I wouldn't say that's true because we're still like 50% from the all-time highs. So really, you know, and really, if you're looking at the stock market, what about Apple? You know, like that's been hammered really hard. What about Facebook? So yes, they may be invested in the stock market, and the Dow Jones S&P may be at certain levels there, but you know, it doesn't mean that they're doing well, right? So you got to take that with a grain of salt. Marshmallow, actually, really interesting story. I won't. I actually used to get called Marshmallow when I was actually when I went to school. The reason why is because my maiden name, my mum's maiden name, is actually called Marsh. So my name is actually when I went to school, my name was actually called John Marsh. Now my birth name from my real father is called Hal. So when I went to school, my mum actually put me down as John Marsh. So the really interesting thing is everyone used to call me Marshmallow at school. That's why I laughed at your name. Because I'm like, oh, it just brought me back to the school days where it was like Marshmallow. Because I was a fat kid as well too. Not like now. I go to the gym every day and sometimes twice a day. But yeah, so that's the reason why I laughed at your name, because I used to get called that every single day at school. Yeah, fantastic. All right, guys. Well, that's it for me today. I hope you enjoyed today's session. Once again, guys, keep an eye on the market itself. The market's always telling us a story. There might be a lot of things happening behind the scenes, but the charts are always telling us a story when we're looking at that. The government can step in and all that sort of stuff. Yeah, so it'd be really interesting to see what's going to happen here. We'll see what's going to happen next week in the markets. And yeah, so there we go, guys. Once again, head on down to mastertraderlab.com. Grab all your 6 bonuses I'm giving away as well too, and start getting into the education that I've already released for this month's training on reading the markets and how to understand what the charts are doing, and start to apply that to help you become a much well-rounded trader. All right, guys, that's it for me. Have an amazing day, and I will see you next time.